Hey everybody, this is Dr. Tom Carr, otherwise known as Dr. Stoxx. Welcome to another edition of Market Talks with Dr. Stoxx. Sorry, it's been a while since I've done a video recording of this, and quite a bit of time has elapsed. I was in Brazil on a mission trip for a couple of weeks and have been very busy putting together a couple of writing projects, and among other things. So apologies for the delay, but let's take a quick look at the current market, which is in a state of pretty sharp pullback. And we need to know whether the pullback here is done, because we've got a little bit of a reversal today, or whether we can expect some more pullback going forward, or even whether this might be the end of the great bull run of 2013. Let's take a quick look at the trend of the S&P 500, which you'll see on the screen right here. One thing I always like to do, is I've mentioned this many times before, is I draw on a trend line from corner to corner, which gives me in this case, roughly about a 45-degree angle for the trend, and we do like to see the trend more or less in line with that angle, which gives us a very sustainable kind of trend. If the trend starts to ramp greater than 45 degrees, then we're looking at an unsustainable trend. And if it's shallower than 45 degrees, we're looking at a rather weak trend, which could roll over pretty easily. But this looks very nice. You can see how more or less the highs and lows appear equidistant from that 45-degree line, and what we do have here, just in short, is a nice sustainable trend. Now, is it a trend that is likely to continue? Well, one way we can determine that is to put in our support line under as many pivot lows as we can. We'll roughly put it there. We always start with a support line and an uptrend, and then you want to draw in your resistance line parallel to that. Even if you don't tag any of the pivot highs, you want to make sure that your line is always parallel to the support line, because that's where the resistance is most likely to be. And we can see we have a nice parallel line with a 3-touch support and a 2-touch resistance, 2 to 3 touch resistance top, and that is clearly marked since the pivot low in June, the current uptrend. And we're within that trend. So as of right now, we can say the uptrend is still intact, and that this is simply a constructive pullback that could be a nice buying opportunity for those of you who are so inclined, and no need really to panic or worry. The only concern I have here is that pullback was pretty sharp. I mean, that was a straight drop down for 3 days, rather than a sort of choppy back and forth kind of action. If you look back here in May and June, which was the most dramatic sort of market reset that we've had, you got a lot of price choppy action up and down, back and forth for several weeks, followed by this blow-off sharp drop 3 out of 4 days in a vertical fashion, which kind of ended that trend. What we're seeing here is maybe the opposite of that. We're getting a sharp drop first, and then I suspect going forward we're going to get that sort of choppy back and forth push me, pull you action between the bulls and the bears. I suspect the bulls are going to win the day in the end, that we will get another run up to about the 1850 resistance area. But I also think that we are due for a pullback to that support line again. Now, it's not too far away. The further to the right we go, the higher that support line will rise, and I suspect that we'll probably meet it somewhere around 1775. So look for another low in the 1770, 1775 area over the next couple of weeks, followed by some more constructive bullish action. And we'll have to reevaluate at that point. 2014 is not likely to be what 2013 was, which was a fairly nice, easy to trade uptrend. We're likely to have more volatility, which means simply we can make more money, because we do make more money in volatile markets. We tend to do much better. We just have to keep a shorter time frame, tighter stops, and trade both sides of the market. Those are the 3 mantras for trading volatile markets. Short time frame, tighter stops, trade both sides of the market. One quick thing I wanted to point out before we end our little time today, and that is that I did want to introduce you very briefly to a screen that I run to find excellent trades for the trend trade letter, and I can reduce the price on this to get us into trades for the cheap stocks letter. I have a screen, a fundamental technical screen that's based on parameters that you'll find in the William O'Neill's book on how to make money in stocks. It's based on a technical and fundamental system called CAN-SLIM, C-A-N-S-L-I-M. Won't go into all the details of that. But I run this scan twice a week or so, and it gives me some excellent trading candidates for our trend trade letter primarily. And I'm looking as I'm scrolling through these charts not only for strong fundamentals, but also for price patterns that are very tradable. This one looks nice and tradable. You've got that triangle there forming with a higher pivot lows underneath the resistance high. It looks like a breakout could be forming there. Here's a home builder that's rebounding off its lows after an ABC pullback. That's a nice looking one. You don't want to trade Citigroup. That looks pretty bad. CBM is making a nice big move. CRZO looks like a nice looking extended constructive base going forward, like a nice little cup and handle base under the 45 resistance line, and that looks like it could be heading for a breakout. So anyway, I just have a number of nice looking charts. These are all companies with strong fundamentals and pretty decent technicals as well, and we're looking for constructive consolidations prior to breakouts mostly in these kinds of setups. And that's the kind of thing we do for our trend trade letter a couple of days a week to refresh our short list of trading candidates. If you want to subscribe to that, go to drstoxx.com, and we'll give you 50% off your first month. Just type in SAVE on 3, SAVEON, the number 3, into the coupon code, and you'll get 50% off your first month of subscription. God bless you. We will see you on the trading floor. We'll be back sometime next week for another installment of Market Talks with Dr. Stoxx. Thanks. Bye.